Question 1. Which of the following is an example of an ethical responsibility of an insurance producer under Louisiana law? A. To disclose to clients all sources of insurance commission. B. To avoid disclosing material facts that could harm a potential sale. C. To guarantee that a client's insurance policy will never be cancelled. D. To provide client with policy that only covers the lowest risks. Answer A. To disclose to clients all sources of insurance commission. Explanation. Under Louisiana insurance regulations, the insurance producers have a fiduciary responsibility to act ethically and transparently in their dealings with clients. This includes disclosing all sources of commission or compensation they receive for selling a policy. Withholding this information would be considered unethical and could lead to legal consequences. The other options are violations of ethical conduct, such as avoiding material disclosure or making unrealistic guarantees. Question 2. Mr. Taylor has just purchased a homeowner's insurance policy in Louisiana, but his house was damaged by fire 2 weeks after the policy was issued. He is unsure if the damage will be covered under his current policy. What should Mr. Taylor do first? A. Immediately begin repairs and send the bill to the insurance company. B. Notify the insurer of the damage and file a proof of loss. C. Wait 30 days for the insurer to initiate the claim process. D. Contact a public adjuster before contacting his insurer. Answer B. Notify the insurer of the damage and file a proof of loss. Explanation. Under Louisiana insurance laws, the insured must notify the insurer as soon as possible after a loss. The insurer will typically require a formal proof of loss, which includes details of the damage and any supporting documentation. The insured is required to cooperate with the insurer during the claims process. Starting repairs before approval can result in denial of the claim. Waiting or contacting a public adjuster unnecessarily before notifying the insurer is not the proper first step. Question 3. Which of the following best describes the risk management technique of risk retention? A. Transferring risk to an insurance company. B. Avoiding the risk entirely. C. Accepting the financial consequences of a risk. D. Reducing the likelihood of a risk occurring. Answer C. Accepting the financial consequences of a risk. Explanation. Risk retention involves accepting the financial consequences of a risk without transferring or mitigating it. It is often used when the cost of transferring the risk through insurance or other means is deemed more expensive than the potential loss. Risk retention is appropriate when the risk is low or manageable. The other options describe different risk management strategies: transfer A, avoidance B, and reduction D. Question 4. Under Louisiana insurance law, an insurance producer must ensure that they are providing all of the following information to a client except A. The total premium amount for the policy. B. The exclusions within the insurance policy. C. The producer's full commission rate on the sale. D. The financial stability of the insurance company. Answer D. The financial stability of the insurance company. Explanation. Louisiana law requires insurance producers to disclose certain critical details to clients, including the total premium, policy exclusions, and commissions received. However, while the producer should encourage clients to consider the financial stability of an insurer, it is not specifically required by law to be disclosed as part of the producer's duties. The other options are required disclosures to ensure the client is fully informed about their policy and costs. Question 5. Which of the following is not a typical cause of loss covered under a standard homeowner's policy in Louisiana? A. Fire. B. Theft. C. Flood. D. Vandalism. Answer C. Flood. Explanation. Standard homeowners insurance policies typically cover risks like fire, theft, and vandalism. However, flood damage is excluded unless the homeowner purchases a separate flood insurance policy. This exclusion is important as many policyholders mistakenly assume flood damage is covered, which can lead to confusion in the claims process. Louisiana residents are particularly affected by this, as floods are common in the state. Question 6. Mr. Wright is reviewing his auto insurance policy. His insurer offers personal injury protection, PIP coverage, but he is uncertain about the benefits. Which of the following is true regarding PIP under Louisiana law? A. PIP covers the medical expenses of the policyholder and passengers, regardless of who is at fault in the accident. B. PIP only covers medical expenses for passengers in the policyholder's car. C. PIP is optional under Louisiana law for all auto policies. D. PIP covers property damage in an accident caused by the policyholder. Answer A. PIP covers the medical expenses of the policyholder and passengers, regardless of who is at fault in the accident. Explanation. Personal injury protection (PIP) coverage under Louisiana law covers medical expenses for the policyholder and passengers in the vehicle regardless of fault in the accident. This is part of the no-fault auto insurance system in Louisiana, which aims to reduce litigation and ensure that medical costs are covered quickly. The other options are incorrect, as PIP covers all medical expenses, not just those for passengers, and it is mandatory in certain circumstances, e.g. for certain types of coverage, but not for all policies. Question 7. Which of the following is a primary purpose of the Louisiana Department of Insurance (LDIA) to underwrite insurance policies for all licensed producers? B. To regulate insurance markets and ensure consumer protection. C. To set insurance premiums for every type of policy in the state. D. To provide insurance coverage to all Louisiana residents. Answer: B. To regulate insurance markets and ensure consumer protection. Explanation: the primary role of the Louisiana Department of Insurance (LDIA) is to regulate the insurance market within the state, ensuring fair practices, consumer protection, and compliance with Louisiana insurance laws. The LDI does not underwrite policies, A. Set premiums for all policies, C. Or directly provide insurance coverage, D. Instead, it ensures that insurers operate fairly, licenses are granted appropriately, and that consumer rights are safeguarded. Question 8. Which of the following is a standard exclusion in property insurance policies in Louisiana? A. Earthquake damage. B. Water damage from burst pipes. C. Vandalism. D. Damage caused by fire. Answer: A. Earthquake damage. Explanation: earthquake damage is typically excluded from standard property insurance policies in Louisiana unless an additional endorsement or rider is purchased. This exclusion is due to the fact that earthquakes are considered an uncommon risk in the state. Water damage from burst pipes, vandalism, and fire are all typically covered under a standard property insurance policy unless specifically excluded by the policy terms. Question 9. Mr. Harris is reviewing his life insurance policy and notices a clause stating that the insurer will pay an additional benefit in the event of his accidental death. What type of rider is this? A. Waiver of premium rider. B. Accidental death and dismemberment rider. C. Guaranteed insurability rider. D. Term rider. Answer: B. Accidental death and dismemberment rider. Explanation: the rider described is an accidental death and dismemberment (AD) rider which provides an additional benefit in the event of death or serious injury caused by an accident. This rider is commonly added to life insurance policies for additional coverage. The other riders, such as the waiver of premium rider, typically waive premiums in case of disability, and the guaranteed insurability rider (C) allows for future policy purchases without underwriting. Question 10. Which of the following is true about the underwriting process for life insurance in Louisiana? A. Insurers are prohibited from considering a person's medical history when underwriting life insurance. B. Age is not a factor in determining premiums for life insurance policies. C. Life insurance premiums are determined by a variety of factors, including health, occupation, and lifestyle. D. Underwriters are only concerned with whether the applicant is Louisiana resident. Answer: C. Life insurance premiums are determined by a variety of factors, including health, occupation, and lifestyle. Explanation: life insurance underwriting involves assessing multiple factors that affect the risk to the insurer, including the applicant's health, occupation, lifestyle, and age. These factors help determine the appropriate premium for the individual. The other options are incorrect because underwriters do consider medical history, age, B, and other factors beyond residency, D. Question 11. Under Louisiana law, which of the following best describes the relationship between an insurance producer and their clients? A. The insurance producer is a fiduciary responsible for the management of client premiums and commissions. B. The insurance producer has no fiduciary responsibility to the client, as they are only sales agents for the insurance company. C. The insurance producer must always act as a representative of the insurer with no obligation to protect the client's interests. D. The insurance producer is not responsible for providing policy details or assisting with claims. Answer: A. The insurance producer is a fiduciary responsible for the management of client premiums and commissions. Explanation: as a fiduciary, an insurance producer has the legal responsibility to act in the best interest of their clients, particularly when it comes to managing premiums and commissions. This includes being transparent with clients, offering fair and accurate information, and ensuring ethical conduct. Option B is incorrect because the producer does have fiduciary responsibilities, and C and D are incorrect because the producer has an obligation to protect the client's interests and assist with claims and policy details. Question 12. Which of the following is a typical condition found in a commercial general liability (CGL) insurance policy in Louisiana? A. Coverage for personal injury, such as defamation or false arrest, is excluded under standard CGL policies. B. CGL policies automatically cover damages caused by workers' compensation claims. C. CGL policies exclude bodily injury claims arising from the operation of owned vehicles. D. CGL policies provide coverage for the insured's own property damage. Answer A. Coverage for personal injury, such as defamation or false arrest, is excluded under standard CGL policies. Explanation: personal injury, such as defamation, false arrest, and libel, are typically excluded under a standard commercial general liability CGL policy unless additional coverage is purchased. CGL policies cover general liabilities but do not automatically cover specific risks like workers' compensation, B, or property damage, D, and exclude bodily injury arising from owned vehicles, C, which would be covered under commercial auto insurance. Question 13. Mr. Decker has recently opened a small business in Louisiana and needs insurance. He is considering purchasing a business owner's policy (BOP). Which of the following is typically covered under a standard BOP? A. Only general liability insurance. B. Property insurance for physical assets and business interruption coverage. C. Coverage for the business owner's personal vehicle. D. Workers' compensation for the business owner and employees. Answer B. Property insurance for physical assets and business interruption coverage. Explanation: a business owner's policy (BOP) typically combines property insurance for physical assets such as buildings and equipment and business interruption coverage, which helps replace lost income during a period of disruption. The other options are incorrect. BOP does not generally cover personal vehicles. C. Nor is workers' compensation automatically included. D. General liability is part of a BOP, but it also includes property and business interruption coverage. Question 14. Which of the following is a requirement for an insurance producer to maintain their license in Louisiana? A. Producers must be employed by an insurance company and cannot operate as independent contractors. B. Producers must complete continuing education courses every 2 years to keep their license active. C. Producers must pass a physical fitness exam to maintain their license. D. Producers are required to undergo a background check once every 10 years. Answer B. Producers must complete continuing education courses every 2 years to keep their license active. Explanation: Louisiana insurance producers must complete continuing education courses every 2 years to maintain their license. This ensures that producers stay up to date on changes to the law, insurance, products, and industry standards. The other options are incorrect because there is no requirement for employment with an insurance company. A. No physical fitness exams. C. And no background check every 10 years. D. Question 15. Mr. Edwards purchased a homeowner's insurance policy in Louisiana that includes flood coverage as an endorsement. Which of the following is most likely to be excluded from the flood insurance coverage under this endorsement? A. Damage caused by sewer backups during a flood. B. Damage to the home caused by rising water from a nearby river. C. Damage to the home's roof from wind during flood. D. Damage to personal property inside the home during flood. Answer A. Damage caused by sewer backups during a flood. Explanation: flood insurance typically covers water damage caused by rising water, but it does not cover damage caused by sewer backups during a flood. While flood coverage is valuable in protecting against many types of water damage, B.D. sewer backups are generally covered under a separate endorsement or require additional coverage. Damage to the home's roof from wind, C, would typically be covered under standard homeowners policy, not under flood insurance. Question 16. An insurance producer in Louisiana has received a complaint from a customer about an insurer's refusal to pay claim. Which of the following actions must the producer take to comply with Louisiana insurance laws? A. Immediately refund the customer's premium for the disputed policy. B. Encourage the customer to file complaint with the Louisiana Department of Insurance (LDI). C. Contact the insurer to resolve the claim on behalf of the customer. D. Withdraw the policy from the insurer and place the customer with another company. Answer B. Encourage the customer to file a complaint with the Louisiana Department of Insurance (LDI). Explanation: if an insurance producer is unable to resolve a claim dispute, the producer should direct the customer to file a complaint with the Louisiana Department of Insurance (LDI), which is the regulatory body responsible for investigating and addressing such issues. The producer does not have the authority to directly resolve the claim (c) refund the premium (a) or withdraw the policy (d) and should instead refer the customer to the proper legal channels. Question 17. Under Louisiana law, which of the following would be considered an unfair trade practice in the insurance industry? A. Providing a competitor's product at low price to attract clients. B. Misleading customer about the terms of an insurance policy to sell more coverage. C. Offering policy discounts based on group affiliation. D. Offering free consultations to potential clients. Answer. B. Misleading a customer about the terms of an insurance policy to sell more coverage. Explanation. Misleading a customer about the terms of an insurance policy constitutes an unfair trade practice under Louisiana insurance law. This is a form of misrepresentation which is illegal and can result in penalties for the producer. Option is not an unfair trade practice unless the pricing is deceptive or violates regulatory standards. Offering discounts based on group affiliation, C, and free consultations, D, are both permissible practices under Louisiana law as long as they comply with ethical standards. Question 18. Mr. Howard's auto insurance policy has a $500 deductible for collision coverage. He is involved in a car accident that causes $3,500 in damage to his car. How much will Mr. Howard's insurance company pay for the repairs? A. $3,500. B. $3,000. C. $500. D. $0. Answer. B. $3,000. Explanation. The deductible is the amount the insured must pay out of pocket before the insurance policy covers the remaining costs. Since Mr. Howard's collision coverage deductible is $500, the insurance company will pay $3,000 of the $3,500 in damage. $3,500. $500 deductible. Option is incorrect because the deductible must be subtracted from the total damage cost, and C and D are incorrect because the deductible amount is not the payout from the insurer. Question 19. In Louisiana, which of the following is required to be included in an insurance producer's written disclosure to client? A. Detailed report of the producer's compensation arrangement. B. The exact policy language that will be used in the client's policy. C. The producer's personal medical history to assess policy suitability. D. The insurance company's financial performance for the past 5 years. Answer A. A detailed report of the producer's compensation arrangement. Explanation. Under Louisiana insurance laws, an insurance producer is required to disclose their compensation arrangement in writing to clients, ensuring transparency in how they are compensated for the sale of policies. The other options are incorrect. The exact policy language, B, is not required in the disclosure, and personal medical history, C, and the insurer's financial performance, D, are not necessary disclosures under the law. Question 20. Which of the following is an example of a policy exclusion in standard life insurance policies in Louisiana? A. Death due to natural causes. B. Death by suicide within the first 2 years of the policy. C. Death due to an accident while traveling abroad. D. Death due to a non-accidental injury after the policy has been in effect for more than 12 months. Answer. B. Death by suicide within the first 2 years of the policy. Explanation. Many life insurance policies contain a suicide exclusion clause, which typically states that the insurer will not pay the death benefit if the policyholder dies by suicide within the first 2 years of the policy. This exclusion is in place to prevent individuals from taking out a life insurance policy with the intention of committing suicide shortly afterward. The other options, A, C, and D, are generally covered unless otherwise specified in the policy. Question 21. In Louisiana, which of the following is an example of a policy cancellation provision under an automobile insurance policy? A. The insurer can cancel the policy for any reason within the first 30 days. B. The insurer must provide 60 days notice before cancelling a policy for non-payment of premium. C. The insurer can cancel the policy immediately if the insured's driving record shows due conviction. D. The insured can cancel the policy at any time without penalty. Answer A. The insurer can cancel the policy for any reason within the first 30 days. Explanation. In Louisiana, automobile insurance policies typically have a provision allowing the insurer to cancel the policy for any reason within the first 30 days, often referred to as the free look period. And after the first 30 days, the insurer must provide notice, usually 60 days, for cancellation due to non-payment. B. And other conditions may apply for cancellation, including dues. C. Option D is incorrect because there might be penalties or fees associated with cancelling a policy prematurely, depending on the terms of the agreement. Question 22. Under Louisiana law, when must an insurance company provide a claim payment for a covered loss under a homeowner's insurance policy? A. Within 15 days after receiving proof of loss. B. Within 30 days after receiving proof of loss. C. Within 60 days after receiving proof of loss. D. Within 90 days after receiving proof of loss. Answer: B. Within 30 days after receiving proof of loss. Explanation: Louisiana law requires that insurance companies make payment for a covered loss within 30 days after receiving the required proof of loss. This provision ensures that policyholders are compensated promptly after filing a claim. Option A is incorrect because the timeline is 30 days, not 15. Options C and D are incorrect because they exceed the legal time frame. Question 23. Mr. Jackson has a health insurance policy in Louisiana. If his policy includes a coinsurance clause, which of the following is true? A. The insurer will pay a fixed amount per medical service. B. Mr. Jackson will pay a percentage of the medical costs and the insurer will pay the remaining percentage. C. The insurer will pay all medical expenses after a deductible is met. D. Mr. Jackson must pay the full cost of medical services until the deductible is met. Answer: B. Mr. Jackson will pay a percentage of the medical costs and the insurer will pay the remaining percentage. Explanation: coinsurance is the portion of the medical costs that the insurer must pay after the deductible is met. This is typically expressed as a percentage split between the insured and the insurer, e.g. 20% by the insured and 80% by the insurer. Option is incorrect because it describes a fixed payment, not a percentage split. Option C is incorrect because coinsurance applies after the deductible, not as a full payment after the deductible. Option D is incorrect because the insured does not pay the full cost after meeting the deductible. Question 24. In Louisiana, which of the following would not typically be covered by a commercial property insurance policy? A. Fire damage to the business premises. B. Theft of business property. C. Damage caused by earthquakes. D. Vandalism, damage to business equipment. Answer: C. Damage caused by earthquakes. Explanation: standard commercial property insurance policies generally do not cover damage caused by earthquakes. Earthquake coverage typically requires a separate endorsement or a specialized policy. Fire damage A, theft B, and vandalism D are typically covered under standard commercial property policies unless excluded by the terms. Question 25. Which of the following is a key characteristic of an umbrella policy in Louisiana? A. It provides additional coverage after other underlying policies have reached their limits. B. It only covers damages related to physical injury and medical expenses. C. It provides coverage for the insured's personal property. D. It automatically includes coverage for flood and earthquake damage. Answer A. It provides additional coverage after other underlying policies have reached their limits. Explanation: an umbrella policy provides excess liability coverage above and beyond the limits of the insured's other policies, e.g. auto or home insurance. It typically covers a wide range of liability risks but does not cover specific perils such as flood or earthquake damage unless those perils are separately added as endorsements. Option B is incorrect because it covers more than just physical injury. Option C is incorrect because it focuses on liability coverage, not personal property. Option D is incorrect because flood and earthquake coverage are not automatically included in an umbrella policy. Question 26. Mrs. Gray has an auto insurance policy in Louisiana that includes a collision coverage option. If her car is involved in a crash, which of the following will collision coverage pay for? A. Damage to other vehicles in the accident. B. Damage to her vehicle regardless of fault. C. Medical bills for injuries sustained in the accident. D. Repairs to her vehicle if the accident was caused by a natural disaster. Answer: B. Damage to her vehicle regardless of fault. Explanation: collision coverage pays for damage to the insured's vehicle regardless of who is at fault in the accident. It is designed to cover repairs or replacement of the insured vehicle after collision. Option refers to liability coverage, not collision. Option C refers to medical coverage, which is separate from collision. Option D is incorrect because collision coverage does not cover damage caused by natural disasters. That would typically fall under comprehensive coverage. Question 27. Which of the following is true about Louisiana's no-fault automobile insurance laws? A. Louisiana is a no-fault state, meaning that drivers cannot sue other drivers for accidents. B. Louisiana requires drivers to carry personal injury protection (PIP) coverage. C. Louisiana's no-fault law means that insurance companies cover all damages for their policyholders regardless of who is at fault. D. Louisiana follows comparative fault system where the degree of fault is determined in accidents. Answer D. Louisiana follows a comparative fault system where the degree of fault is determined in accidents. Explanation: Louisiana is not a true no-fault state but instead follows a comparative fault system. Under this system, the degree of fault in an accident is determined and compensation for damages is awarded based on each party's degree of responsibility. Option is incorrect because Louisiana allows for lawsuits in accidents, but the fault is shared. Option B is incorrect because PIP is not mandatory in Louisiana. Option C is incorrect because Louisiana does not cover all damages for policyholders. Fault must be determined. Question 28. Which of the following is true about the standard fire policy in Louisiana? A. It provides coverage for both fire and windstorm damage. B. It typically covers losses due to vandalism and burglary. C. It only covers fire damage to the insured property. D. It includes coverage for flooding caused by fire suppression efforts. Answer C. It only covers fire damage to the insured property. Explanation: the standard fire policy in Louisiana primarily covers losses caused by fire. It does not typically include coverage for windstorm damage, vandalism, or flooding unless additional coverage or endorsements are added. Option is incorrect because windstorm damage is not included in a standard fire policy. Option B is incorrect because vandalism and burglary are typically covered under a separate endorsement. Option D is incorrect because flooding is not typically covered in a standard fire policy. Question 29. In Louisiana, what is the primary purpose of the Louisiana Insurance Guarantee Association, LIGA? A. To provide a secondary layer of insurance coverage for policyholders. B. To assist policyholders in locating the cheapest insurance rates available. C. To protect policyholders when an insurance company becomes insolvent and unable to pay claims. D. To regulate and approve insurance policy rates in Louisiana. Answer C. To protect policyholders when an insurance company becomes insolvent and unable to pay claims. Explanation: the Louisiana Insurance Guarantee Association, LIGA, is a state program that protects policyholders if their insurance company becomes insolvent. It provides a safety net for consumers, ensuring they receive claims payments if their insurer is unable to meet its obligations. Option is incorrect because LIGA does not provide secondary coverage. Option B is incorrect because LIGA's purpose is not related to finding cheap insurance rates. Option D is incorrect because regulating insurance rates is the role of the Louisiana Department of Insurance, not LIGA. Question 30. Which of the following is the maximum liability for uninsured motorist coverage in Louisiana? A. $50,000 for bodily injury per person, $100,000 per accident. B. $100,000 for bodily injury per person, $300,000 per accident. C. $25,000 for property damage, $100,000 for bodily injury. D. There is no maximum liability for uninsured motorist coverage. Answer B. $100,000 for bodily injury per person, $300,000 per accident. Explanation: Louisiana law mandates a minimum amount of uninsured motorist coverage, which is $25,000 per person and $50,000 per accident for bodily injury. However, many drivers choose higher limits, and the most common maximum liability limits are $100,000 per person and $300,000 per accident. Option is incorrect because the bodily injury limits are lower. Option C is incorrect because the property damage limits are not directly related to uninsured motorist coverage in Louisiana. Option D is incorrect because there are limits that they can vary depending on the chosen policy.